Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Reema. Guys, hi, good morning.
Hi, good morning. Looks like today will be a little better day. Record highs for S&P, a soft comment.
But the green, Reema, I mean, I think it's
a vibrant.
The market's going to take a cue.
Yeah. Vibrant colors this morning.
Well, indeed. And yesterday we were glaring at red. And I think today should actually be a better day. We can't really run away because we don't know what Trump's going to do next. But I think today we should be a little bit more optimistic about the day. And then just tomorrow and then the long weekend.
The eyes are gleaming.
End of earnings as well, guys.
Absolutely. Well, I think the start is also good in terms of inflation numbers, right? And I think that's essentially what I want to start with before we go any further. And this is not, by the way, inflation just in the US. Yesterday evening, we had India inflation numbers as well, which is not a big surprise or anything. I mean, actually, it's in line with what markets were expecting. The numbers should come up on your screen. India, 1.6% growth. US inflation, 2.7%. So those are the figures up on your screen. I mean, I think you can add... maybe if you wanted to comment, India inflation 1.6%, comfortable, not a problem. US 2.7% has not risen yet. I mean, the expectation is that eventually US inflation, because of tariffs, etc., maybe a month, 2 months down the line, is going to rise. But for now, I mean, this is a good-looking screen. So US equities, on the back of the number in the US, it reached all-time high. The change is on your screen, the S&P, the Nasdaq, but it was actually the small-cap space which really rallied hard, 3% or so in the green. So the CPI number out of the US was taken as a sort of a clearing event for a 25 basis point cut in the month of September. Actually, your Treasury Secretary, Scott Bessent, who went on to Fox, the news network, and said, the Fed ought to be open to a 50 basis point cut in September. So, of course, I mean, this is just, coming in from the Trump administration in terms of a push. But 25 is something that the markets now are comfortable pricing in because of the inflation number. Dollar fell sharply, and we're about 0.5% lower to 98. Of course, it was to do with the cooling off inflation. Actually, the no rise in inflation, I should put it that way. But there was also one more factor. And that factor, of course, was the new Bureau of Labor Statistics chief. Remember, Trump asked the previous BLS chief to leave. He basically fired him. And his new pick has essentially apparently said that he wants to suspend the monthly NFP report, the non-farm payrolls report. He says there are too many problems in it. What we'll do is we'll sort of look at this. We'll release this data on a quarterly basis till we fix the monthly report. I mean, is it actually going to happen? But at least this is what reports are suggesting. This is another headwind as far as the dollar is concerned. And it was, I think, a mix of both that you saw a pretty large, pretty steep fall as far as the broader dollar is concerned, which is the dollar index. Oil prices, $66 a barrel, not very much. To talk about, a few specific news items. Intel was up 6%. 3 days in a row it's been gaining. Remember, it's another situation where President Trump publicly asked the Intel CEO to leave. Of course, I mean, the CEO went and met President Trump in the White House. Stock's done well since. In terms of just talking about chip-related news flow, China is urging NVIDIA, the Chinese firms from not using NVIDIA H20 chips. The background, of course, is President Trump saying that NVIDIA and AMD, etc., are going to, pay U.S. government 15% of what they make in China to the U.S. government to be able to sell to China. And this is essentially what is coming in from China. And of course, the point with regards to China has been that they think that there are perhaps some backdoor to these chips where U.S., etc., can access data in China. So, that continues. With regards to China, some bit of positive news flow yesterday. China and India are set to resume direct flights to each other after a gap of almost 5 years or so. And apparently this is going to happen in the next 1 month. A fair bit of easing, remember. We've seen between attempts at normalization. Press note 3, for example, is something which is being diluted, which is being walked back, etc., etc. So we'll see perhaps more, but this is, of course, a big step. I mean, so far, flyers were going through Singapore, Hong Kong, etc. Now you got, after 5 years, direct flights, perhaps, which once again will start. Another bit of news flow, a cargo of Indian diesel refined products is heading to China, again, the first since 2021. So a lot of change which seems to be afoot with regards to India and China. And of course, in the backdrop, of course, is the worsening of relations between India and the US. Just to tie in the markets and what they perhaps will do today, yesterday was disappointing. Monday was a big, decent day. Yesterday, the market gave up about 50% of the gains. And the question really is, if both the Nifty and the Nifty Bank break the recent lows, are we going to sort of slide without a bounce? I mean, I thought there perhaps is a pullback which is due, and it looked like Monday gave us that indication that that pullback is coming. But yesterday the market sold off. This morning, I think the start, of course, is set to be higher. We'll have to pick up indices from there. Just the levels, the Nifty near-term levels. Of course, we broke the previous levels of 24,634 on the upside, but could not sustain above it. The high which the market made was 24,702, and that remains the first level which the market needs to take out. The low of 24,337 is the number on the downside. For the Nifty Bank, it also gave up most of its gains. It's back to the prior lows of 54,905, and here 55,582 and 55,652 are the upper end, the resistance level, the resistance zone really. And on the way down, if the recent low of 54,905 goes, then you're looking at about 55,440 to 54,054. So these are two levels. We're already at the first support level. We just need to see if that breaks. If it breaks, then the second support level comes into view. But I think the GIFT Nifty is indicating a higher start. Hopefully, we kind of build on that 70-point up move that the GIFT Nifty is implying. Rima.
Indeed, a softer CPI inflation print back home and record highs on Wall Street. Both these two factors helping the GIFT Nifty up by about 75 to 80 points. But as Prashant said, there are lots of big global stories to take note of. Investors doubling down on a September Fed rate cut. Besant batting for a 50 basis points rate cut. And then there is this battle for AI supremacy. Perplexity AI has made an unsolicited $34.5 billion bid for Google's Chrome browser. This was confirmed by CNBC. And what's absolutely stunning is the valuation. Because in July, a month back, Perplexity AI's own valuation was $18 billion. And now they're making a bid for Chrome at double that. And yet they say investors seem to be backing this deal. So it's all happening in the world of AI, and that's the other one we need to track. Let's just take a quick note on what's happening in Asia. As we pointed out, GIFT Nifty is higher. Japan is soaring. That's up another 1.5%. It's a fresh high, and it's crossed that 43,000 mark for the first time ever. We also got the quarterly or the latest Tankan survey, which shows that manufacturers in Japan are turning more optimistic after Japan struck that deal with Washington. Also, with respect to China, U.S. Treasury Secretary Besant has signaled that he might meet his Chinese counterparts within the next 2 to 3 months. Back home, just some more numbers on that inflation print. 1.55% for the India CPI inflation print. It's cooled down in the month of July. This is the 9th straight month of moderation and the lowest since July of 2017. So it's beaten consensus. In terms of flows, the DIIs were net buyers to the tune of 3,500 crore rupees, while the FIs sold a similar amount. 3,400 crores sold in the cash market. Earnings season remains in focus. Today, Nykaa, Honasa, both of them have delivered good set of numbers. And we will track numbers from Jubilant Foodworks, IRCTC, BPCL, United Spirits, amongst some of the others. Nigel?
Well, today, by the end of the day, if we don't end with some good gains, I think I'll be a little bit disappointed. Because just looking at the screen, looking at the global cues, some optimism that maybe, in fact, the peak Trump tariffs have played out. And also, if you look at yesterday's trading session, well, we ended at the day's low. So by the end of today, you'll be optimistic that maybe, in fact, you go home with some gains. And just take a look at that. Yesterday, you had the sensex that ended at the low point of the day. It's a Tuesday. You have weekly expiry that played out there. So that could be one factor at play. But otherwise, the problem pocket for the market has been the Nifty Bank, because the shots are getting added out there. And in yesterday's trade, though the Nifty ended down with a cut-off closure around 100 points, the India VIX remains at very, very subdued levels. So the India VIX at least is not indicating that we're going to pull back big time from here. Though the Nifty was down close to 100 points. But as I mentioned, the shots are getting added onto the Nifty bank. The open risk moved up yesterday. That one, in fact, lost its way in trade. And the FIs, they have been adding shots, and yesterday was no different. They added close to 5,000 contracts, short positioning at around 92%. Yes, those are at extreme levels that we're seeing, but the clients, they continue to remain net long in terms of their positioning. On the option side as well, yesterday the FIs, they in fact wrote calls while they unwound some puts as well, in terms of the options data. And if you tie that in with the options data for the market on the whole, well, it perfectly ties in, because yesterday the call writers, they felt that they're back in the game. And that's what called the PCR to come down from around 1 to around 0.78 or thereabouts. And at around 0.65 to 0.7, that's when you see a bit of a bounce. So we're moving gradually towards that zone. I'll keep an eye out on that zone, 0.65 to around 0.7, because the call writing was extremely aggressive. Remember, these options expire tomorrow. That's a 24,700 call, 60 lakh shares getting added there. 24,500 call as well was very, very aggressively written in trade yesterday. And the premium had come down from around 120 rupees or thereabouts. So let's bring the levels up for you on the screen. The Nifty, well, yesterday's high, which was at around this 24,700 odd, that's the resistance zone that we're looking at. Once you get past this, then you look at higher levels like the 20-day MA. But for the time being, this appears to be a very stiff resistance, because in the first hour of trade, we already went to that mark. The reference point on the downside, though, is 24,350. That's the recent low that were made in that vicinity itself. But one positive yesterday was at least the Nifty made a higher high. After many, many days of making, lower highs, we broke that trend, and now, in fact, yesterday as well. So today, this is the mark that you're looking at in case the Nifty can get up and going. Crucial resistance mark. The Nifty bank, that's lost its form totally. It needs to find its footing. Otherwise, the Nifty will be in trouble. And yesterday, in fact, it ended at around that 100 DMA. So you'll want to protect it today on a closing basis. So I'll keep an eye out on that one. But as I said earlier, today you should be a little bit more optimistic. And by the end of the day, hopefully we go home with some gains. If you're looking at the stocks, Titagar Rail, yesterday I had mentioned numerous times during the course of the day, that could probably get into the FNO ban. That's precisely what's happened. So that's a stock you should keep on your radar.
Thank you very much for that. Let's get to the equity calls then. It's Mahesh Nandarkar of Jefferies who believes the Indian market is poised for a short-term bounce. This is after a sharp underperformance to the MSCI emerging markets over the last 12 months. What will drive it? Relative valuations getting back to average, domestic flows jumping considerably, and a stronger year-on-year number in the September quarter earnings fine print on account of the low base. And then there is the potential trade dispute resolution with the US, which could act as a trigger. The bounce he adds may not sustain for a long time. It could be short-lived due to the weak value versus growth equation and equity supply concerns. He says the laggards in the last 3 months that they like are Lodha, Cholamandalam, Adani Energy, Shriram Finance, Jubilant Food, Mankind, NTPC and Crompton to play the near-term bounce and beyond. And they also like cement, given the pricing-led recovery, and it remains their high-conviction idea.